Hi, I'm Christina Robinson, and welcome to another edition of CMS Forex News. Today is Tuesday, January 29, 2008. Japan had a flurry of data last evening. Household spending improved and increased 2.2% on the year in December. This surprised expectations of a drop. On the downside, overall household incomes decreased 2.7%. The unemployment rate remained at 3.8%, beating forecasts for a slight increase. The economy added jobs in the retail sector, while manufacturing and construction jobs saw declines. In a third release from Japan, December's retail sales inched up by 0.2% on the year and declined 0.8% for the month of December. Both of these figures were lower than in November. Turning to Europe, the current account in the Eurozone shrank to 0.7 billion in November, though October's number was revised up. In the UK, a survey of retailers showed growth slowing in January compared to December. The Distributive Trade Survey registered a measure of 4, half of last month's total. In Switzerland, the UBS consumption indicator remained stable, signaling that consumer spending in the country is healthy. The trade surplus, however, shrank to 0.2 billion, a modest decline led by a drop in exports. In the U.S., orders for durable goods during December rose by 5.2%, much better than expected. The report showed that businesses were spending on capital goods, though part of the gains was the result of higher orders for commercial and military aircraft. Excluding orders for transportation, core durable goods were up 2.6%. An index of 20 metropolitan cities and their housing prices showed an annual decline of 7.7% for November. The declines were broad as all cities surveyed showed prices falling during the month. Finally, consumer confidence in the U.S. fell compared to the upwardly revised December number. The 87.9 level was better than forecasted. U.S. consumers are concerned about the looming recession and the impact that will have on jobs, earnings, and the housing prices. Turning to some market highlights, we see that the euro-dollar pair halted its advance and fell slightly in favor of the greenback. The better-than-expected durable goods orders was a positive sign for the U.S. economy, which is heading near a possible recession. The pair touched a session low at 1.4734. Carry trade pairs fared slightly better as global stocks recovered, but today's moves were not as significant as yesterday's. In this look at the Aussie-yen pair, we see the pair reaching above yesterday's high and it again testing resistance. The U.S.-Canadian dollar pair fell in favor of the loonie and broke down below parity again. The pair hit a low 150 pips below its open for the week. The loonie's gains are being driven by speculation that the interest rate yield between the two countries is expected to widen in favor of Canada. Tomorrow, all eyes will be on the Fed as it concludes a scheduled meeting on monetary policy. After cutting 75 basis points last Tuesday, the markets are still anticipating another 50-point cut. Also tomorrow, the U.S. will release the advanced version of fourth quarter GDP. And that's it for today's news. Thank you for watching. Join us again here tomorrow at cmsfx.com.